Tracie, there's no doubt that trade is front and centre right now. Right. How are you at Wells Fargo thinking about it when you talk about asset allocation in this environment?
Yeah, so obviously so far the trade tariffs have been targeted towards China. And although they've been broadened with Friday's announcement that there could be an additional $200 billion in tariffs, they're still pretty narrow. So in terms of, they're not very deep. So in terms of the amount of a tariff that would be imposed if that proposal were to go through, it would be about 10%. Now, that's not going to stop trade. However, it will increase prices, and higher prices are certainly a negative for consumers.
And how much disarray will it throw companies into? I was reading one statistic this morning where 40% of trade is actually within companies.
That's right, yes. And supply chain issues are another factor should all of this go through. But our expectation is that rhetoric will continue to increase and that the tariffs will actually be very targeted and that this is part of a negotiating strategy.
Now, you did mention the secondary effects like confidence, for example. We got confidence data today. It just missed. I mean, it's still at 126.4. Present situation is 161.1, just a little bit of a miss as well. But expectations lower, 103.2. What does that say about what's to come?
So certainly consumer confidence remains high at this point. Business confidence remains high. But should we see that start to falter, we could see companies starting to pull back on some of their CapEx spending, and we could see projects postponed. So a resolution to some of the tariff questions is very important to keep our economy going this year.
Tracie, when reading your reports, Wells Fargo warned for the second half of the year that volatility could be a key issue. One to watch was what you said. And when I'm looking at volatility, I mean, the VIX is even inverted. We're seeing at the moment the front month volatility being more richly priced. And it really just shows the concern about near-term risks. Where do we go in terms of volatility and where do we go in terms of asset allocation when you're in volatility?
Sure. So we have seen volatility pick up this year, and we anticipated that. Last year, you know, markets were really focused on tax cuts. This year, the focus has been more on a tax increase in the form of tariffs. And don't forget, we've got midterm elections at the end of this year as well. So volatility could persist, but the good news is that the economy is still chugging along at a decent clip, about 2.9% this year, and that should lead to higher markets by the end of the year.